morning I thought we'd do something a little different. I'm going to be moderating a panel for the Urban Land Institute and the NAIOP group here. It is December 2020, so of course it's going to be a Zoom panel. But I thought we'd go through what I think is interesting before the discussion, and then we'll come back and kind of recap on what the audience thought, see if we answered their questions, and take a beat on what's going on out there. So I'm entitling this "The Light at the End of the Tunnel." Again, here we are in December. The vaccines are about to go out for the pandemic, and we're hoping we see the end of the abrupt changes in our life. I think hospitality will come up in the discussion. I think that the bid-ask differential for our properties is something that's important that not everyone may be seeing. And I know people are going to ask, when will we see normal transaction activity, whether it's in leasing volume or commercial property sales? Undoubtedly, we're going to touch on banks and CMBS lenders. The money is out there this time, and that seems to be really propping us up. Apartments and industrial are probably the best class of assets, and that is still true here in Hawaii. In retail, I'm finding there's very different segments, and it's all being lumped into one category that retail is a bad word, so that might provide some opportunities. And are people over leveraged? So those are the things that are on my mind before we started, and we'll see what the audience has to say, what their questions are, where this takes us. I'm going to be moderating with Mike Hamasu from Collier's Research Department, and then Paul Brubaker from TZ Economics. Ought to be fun. Thanks.
With that, I'd like to introduce our moderators for today's panel. Our very esteemed Mark Bratton, the Senior Vice President of Investment Properties over at Colliers, Hawaii, one of the top brokers in the state. Take it away. Thank you, Mark.
Thanks, Duff, and welcome everybody. At least in my mind, I'm entitling this discussion "The Light at the End of the Tunnel." And we will be open for questions. We plan on going 45 minutes or so, leaving 10 or 15 minutes at the end for questions. The panelists will stay on afterwards if there's additional questions or talk story time. So we're going to have Mike Hamasu start off and give a broad overview of different food groups and segments within the commercial and investment markets. And then we'll have Paul Brubaker, I want to say bring up the rear, but polish off all the questions that have been unanswered. With that, I'll turn it over to Mike.
Aren't able to tour their properties here, so that might be a restriction that may be contributed to the drop-off in foreign and domestic, U.S. domestic investment. I wanted to raise a question with Mark at this time in terms of where he's seeing the bid-ask spread currently. I know, with this drop-off, Mark, any feedback on regards to the bid-ask spread?
Certainly, that's an issue we're facing. We've faced it in other cycles before, and it's pretty consistent across the U.S. mainland. There's lots of money out there for transactions. It is a little more opportunistic because people think we're in a dip. So the difference between the bidding price of buyers and the asking of sellers who really haven't changed their outlooks on their values, and so far have been able to hold on to their properties, and it's brought transactions to a halt, really. But it's pretty much the same here as on the mainland. We're down about 65% in the commercial real estate market, whether you're measuring volume or even numbers of transactions.
Good point. As a result of the lack of mega deals, we're seeing, in terms of percentage increase, 90% of the transactions for 2020 are under $10 million in sales price, which happens to primarily be in the sweet spot for local investors in our marketplace. Mark, are you seeing a lot of activity from a local investment perspective?
Yes, and I think that some of the local investors are making good buys right now. It is clearly under $10 million. There's a lot of, kind of $1 to $4 million, whether it's small office buildings or walk-up apartments, but there were several local investors who were busy buying properties this summer, and they would have been overbid by people not from Hawaii.
It was a minuscule 1%. I wanted to raise a question here with Mark in regards to the hotel market. We're kind of concerned that delinquencies in the hotel arena are starting to rise. Are you seeing possibilities here or opportunities here in Hawaii for hotels?
Well, certainly the buyers are out in droves looking for them and have been since April. But the lenders, whether it's the Wall Street and CMBS lenders or local lenders, have been able to work with their buyers. And in fact, the CMBS list of properties that are in special servicing or in watch list has decreased the last 2 months. One of the interesting trends that we're able to see and talk with local bankers about is people came into this part of the cycle with less debt and much higher reserves. I talked to 4 major hotel owners about 2 months ago. They were all current on their mortgages, and they basically said, we've done so well the last 5 years, we've just been tucking money away.
Wow. Well, I guess that bodes well for our hotel marketplace. In regards to this slide, I know it's very jumbled here, but basically what I wanted to raise a question is where do you see the opportunities in this marketplace? People want to do all high risk type opportunities or debts, but Mark, any idea as to where you think investors that want to enter the commercial real estate market might be looking at?
Yeah, I think timing becomes key, and I start off by saying that we might be able to see the light at the end of the tunnel. I think a lot of prognosticators are thinking that by next summer we'll have some form of normalcy even in Hawaii and getting our economy, not back to where it was, but at least healthy. So if you wanted to time that a little before it, while the markets are still dislocated, so probably first quarter of this year is still going to be a good time to buy. I'm particularly fond of retail, and I think that all retail, whether it be enclosed malls, resort retail, or grocery anchored, are being lumped into one category. Lenders don't want to lend on it, they don't want to lend as much. And clearly from our operations and management company, we can see that the centers that are based towards local customers are doing much, much better. And yeah, they had to work with their tenants, but it's just a tale of two worlds, if you will, within the retail segment. There's definitely uncertainty in the market, and I'm trying to teach my kids this lesson. This cycle, most of us have been through a bunch of cycles. So when there's uncertainty, there's opportunity. A lot of people are looking at the hotel markets here, and again, there's capital chasing, and the only thing that's really getting placed is pretty secure type of capital. So we've seen people buying loans or buying down loans or putting in preferred equity, but very few outright sales and really no movement on, from the big lenders on moving towards any type of foreclosure.
Mark, any comments on maybe from an investment perspective on the office market? You see people looking at that as an opportunity?
Not much yet. There's always been, or I should say the last 4 or 5 years here, there's been a lot of discussion about converting office buildings, whether it's to hotel and hospitality or residential that's happening here in downtown. So I expect that discussion to continue. My personal opinion has changed over the last 9 months. I think the first couple months I thought, the office market will be pretty steady. We'll, between social distancing and people working from home, it'll be kind of a wash. But I think most of us, most of you, really will end up and want to be working from home, have some freedom, and that plays into employees' happiness and recruiting. So I think it's a permanent change.
Interesting. Paul, any comments before we move on?
The main one would be to be careful not to jump from one corner solution to the other, like we're all going to work in an office, we're all going to work at home. And I think part of the complexity we'll confront is that there are going to be countercurrents. For example, if you need more social distance, we just spent 10 or 20 years cramming everybody into tiny cubicles where we could transmit infectious disease more easily. And so in an environment, even where there are fewer people working on a regular basis in say a downtown office space, or only some days a week, the fact that we need more social distancing, the fact that we can't cram people on elevators and whatnot may actually cut in the other direction, and may require different kinds of space. So spaces where people can actually meet to collaborate some of the time, but not have to be there all of the time. There's going to be a lot of countercurrents, as they say, and I think opportunity for people with creative and property management and design and thinking about how we use and how we price space to be a part of the transition that seems, as Mark says, way more inevitable now than we might have thought 9 months ago or a year ago.
Interesting thoughts, Paul. Thanks. Okay, we're going to go on to the industrial market, and we keep alluding to Amazon, one big transaction, so we'll definitely touch on that transaction. A little bit of basic information. Industrial market, which had been hovering around 2%. That's before we move on to the economic forum for fall.
I think one trend that I see in there in the office and the retail is, I don't remember ever seeing this in my career before, but as those tenants come to the end of their lease, there's 1 year left, there's 2 years left, it's been easy to just give up. In the retail market, you see it in the restaurants, some great chefs and some great restaurants around the state just said, let's just take a break. Why should I sign such a big commitment? And then in the office sector, maybe not shutting your office, but saying, I'll just take a 1 year extension and let's see how it goes. So those are a little different aspects than we've ever seen in the market before.
Interesting. Yeah, that's a surge in like short-term leases, just to test of where the market's going to be in the next year.
Yeah.
Good point. Anyway, that kind of concludes the real estate sector of this. Why don't I go ahead and have Paul pull up his slides when he talks about his forecast for the economy.